All right, so hey, I'm Don Cardinal, Managing Director of Financial Data Exchange. We're a data standards body. We are dedicated to unifying the industry around a common, interoperable, royalty-free standard for sharing data, the FDX API. Now, relax. I'm not here selling you anything. Why? We're a 501c6 not-for-profit and have no commercial interests. We operate primarily in the U.S. and in Canada. So, Christine, I don't know how to advance the slides. Thank you. So what we're here today to talk about is Dodd-Frank Section 1033. Thinking, oh my gosh, this is an API company. Why are we talking about regulation? Well, we'll get into that in just a minute. So let's take a look. All right. So as part of the aftermath of the crash in 2008, 2009, the Wall Street Reform Act, also known lovingly as Dodd-Frank, was passed in July of 2010. There was a section in there, and yes, there were over 1,000 of them, 1033, 1033, they have to call it, specified that banks now needed to make data available to consumers. And the exact text was, a covered person, which means a regulated bank, shall make available to consumer information about their accounts, their transactions, their history, fees, etc. And it also said that has to be in electronic format usable by the consumer. So what does that mean? It basically codified hey, this is the consumer's data. And if a consumer asks, you have to provide it to them in an electronic usable format. So this is the predicate. So that was 14 years ago. What's happened in between? So let's go forward one more. So roughly 7 years after that, the CFPB says, hey, no one's really done a lot with this. They put out a set of principles. Here's kind of what we think should happen. They had a lot of discussions in intervening years in 2020, 2021. And fast forward to 2023, October of last year, they actually put out a proposed rulemaking. Says, hey, now under the Administrative Procedures Act, the government has to say, hey, everybody, we're about to put out a big rule. We want to hear what you think. Here's what we're doing. Here's why we're doing it. Here's who we think's impacted. Please respond. There were over 1,000 comments to that proposed rulemaking. So in the intervening time, we've had quite a bit of industry activity in the space. And they've actually decided, you know what, we need a standard setting body. And they put forth final rules in June to say, if we're going to pick a data standard, not unlike the USB of data sharing, how would we do that? And so they put forth those rules. Now, FDX has applied as of last week to be one of these standards. We hope we're accepted. The CFPB put our application up for public review as of Monday. And so all of you want to read it, by all means, please do so. The current thinking is the final rule, that is the final version of what they put forth last October, will be released sometime next month. Now, nobody knows for sure other than the CFPB, and they're not saying, but a lot of the people in and around Washington are saying, yes, the final rule should drop in October. And at the same time, they should name at least one standard setting organization. So that's kind of what it's looking like. That's what the timeline is. What happens at that point when a final rule starts, there's usually a 60-day implementation period. And then the implementation period starts. The actual gun starts. And that's when you have to comply with that. If the text of the final rule matches the proposed rule, what will happen is wave one of banks and large fintechs are going to have APIs that are conformant to the data standard in 1033 in June. That is 6 months after the rule goes effective. The second wave, which is roughly 40 institutions, will likely be in December of that year. Then there's kind of a pause as you get down to the next large wave, with about 1,100 institutions. That would be effectively June of 2027. And finally, the last and very end wave will be everybody else. And that is roughly 8,752 institutions. Every credit union in America and every regional and local bank that has online banking has to have this API. So good news is in 4 years, no one will be sharing IDs and passwords to allow access to the bank or credit union. The hard part is this is a lot of change. You're talking about anywhere from 10 to 12,000 institutions who now have to stand up APIs that have to be secure. So there's a lot of things going on in the API space. So I told you this regulation would indeed tie back to the API world. And that's kind of where we're going. So let's go ahead and jump ahead. So let's look at who's due. Now, it was a quick marker on the prior slide, but roughly 6 months afterwards, we're thinking that's June if it doesn't change. Now, the final rule pushes that back. That's on the government. But if you're over 500 billion in assets, which is likely 8 to 10 institutions, and you're a non-financial institution with over 10 billion in revenue, so if you're a super big fintech, again, you're looking at June. Your next wave up is 50 to 500 billion. Third wave, again, 850 to 50. And that 48 month in December of 2028, 850 million or below. So as you start thinking about those of you in the audience who are in API implementation business, this is your new client base to go get. Now, I will caution you, the last two waves are primarily hosted by core processors. Most regional and community banks and credit unions actually do a lot of their banking through core processors, things like Jack Henry, Fiserv, FIS, CSI, Finastra. And so they will likely be their tech partners in this. So I just wanted to give you an idea of the scale of when these things are going to happen. But indeed, they will have to have APIs. So let's roll forward. So I wanted to give you a better picture of what the banking industry looks like. And it's a barbell-shaped industry. And some of you stat majors are going to have a fit because I have two different axes here. But visually, it still kind of makes sense. So bear with me. On one side, you have the super bigs. And then it drops down to the super regionals. And they collectively are that first tiny dot on the graph on the left. And then you have large numbers of smaller institutions on the other end. And so you do have this barbell when you look at the number of consumers on that and this kind of gulf in the middle. And you'll notice that if, for example, the smalls were to all collapse their charters into one bank, they would actually be a super big. I think people forget just how much community banking and local banking and credit unions do for America. And so I wanted to give you a sense graphically of what that population looks like. So that first little nib will likely be, the first half of that first little nib will be June of next year. The first nib and half the second bar will likely be December. The middle two bars will be the second wave, and the last three bars will be that final wave. It's going to be huge. But I just want to give you a sense of kind of what it looked like. And I want to point out this is nothing new. So when online banking rolled out, when mobile banking rolled out, they did the same thing. The super bigs got it. The super regionals got it. The mid-majors started on it. The core processors started on it, and they met in the middle. Same sort of deal when mobile rolled out. The super bigs, the super regionals, the core processors, and they met in the middle. And so this is just wave 4. So if you did online banking, mobile banking, EMV card, and now open banking, open finance. So it's following the same pattern, well-trodden pattern as we've seen. So let's roll forward and talk about this. So what in the world does this have to do with APIs? Remember, the rule itself says you have to have a developer interface, which is regulatory speak for API. And they said, listen, you can make it, you can buy it. We don't care. And that's fine. And again, classic make or buy decision. So which APIs? Well, they did say, look, industry standard setting bodies, which we hope will be us, but could be others as well, that are active in an inclusive manner, have a critical role to play. The regulators know they're not technologists or engineers. So they said, listen, standards are the way to go. Standards have helped industries in so many other ways. I use USB quite a bit, but Bluetooth is another great example. The industry said, hey, wouldn't it be great if we just plugged stuff in and it worked? So there's a lot of advantages to having standards, mostly in competition and lowering barriers to entry. So that's good, but it also for security, because with well-trodden security patterns that a lot of eyes have seen, it's a great starting place versus somebody standing up an API from scratch and not knowing what they don't know. That's a bit worrisome. So standards are a really wonderful way of doing that. So let's go forward one more. So the industry has not done nothing. You saw in 2017 when the principles came out, I wonder if the industry reacted. Well, indeed they did. So the APIsec, through their integration working group, mostly the banks and brokerages, got together and created an earlier version of the API. Didn't get a lot of traction in 2015. The fintechs got together in 2017 along with time of the principles. Didn't get a lot of traction with the banks. 2018 comes along. Nothing's coming. We know the regulators are going to do something. We probably should work together. And those of you who remember the old modem days, you have a send and an ACK. Strangely enough, you need both parties to agree on a communication on how it's going to work and what's going to work. So we created the Financial Data Exchange as a neutral party. Think of it as Switzerland. And the idea is it's a safe place that complies with all the antitrust laws or the Competition Act in Canada for people that normally compete with each other to work jointly, openly, and transparently on creating industry utilities. And indeed, we started out with 24 members, and we had roughly 2 million users by 2019. Still relatively small, considering there were over 120 million ID and password pairs being shared at that point in time. Fast forward, we brought in other groups like OFX. We've increased our membership, and now we're just over 200 member organizations. We just released version 6.2 of our spec, and we have 94 million consumers using FDX today. No taxpayer dollars were needed, and this was done voluntarily at no cost to the end user. So you think about it, we voluntarily fixed 94 million of the 120 million ID and password pairs floating out there. That is a testament to the power of the industry and the ecosystem working together to basically make everybody safer. If we get rid of these held away credentials, we will dramatically reduce the risk surface, because if third parties don't hold credentials and they ever breached, well, you can't lose what you don't have. So you're a lot less likely to see these, IDs and passwords for your banks and brokerages out on the dark web. 2, if we're ever going to get to that passwordless world, you have to stop using passwords. And the very first thing you have to do with that is stop third parties from using your passwords. So the order of operations is third parties stop using your bank IDs and passwords. Then you stop using it as your primary authenticator. You rely first on FIDO biometrics, and then passwords are relegated to recovery or forgot flows in the basement, along with SMS, stored value questions, public data questions, and other things. Stuff that, they're deprecated, but they're better than nothing. And in a, again, forgot or recovery flow, they're useful, or a step-up flow, but they're not your primary authenticator. So that's the wonderful world we're painting simply by working together on common data elements. So let's go ahead and flip forward. So how does this all work? What's our role? Well, remember, the government is putting forth a proposed regulation and eventually a final regulation. That regulation was very careful to spell out the what they wanted to have happen, but also very careful to leave the how to the industry, to all of you. So we decide what the standard payload should look like. Is this field date? Is it ISO? Is this field 16 characters or 18 characters? Is it string? Is it numeric? Also to publish guidance on security, authentication, user experience, and connectivity protocols that reflects the industry best thoughts on what works, what doesn't work, things to avoid, and how to minimize risk. If you saw Vincent's presentation, he had a lot of best practices, and luckily we incorporate a lot of those. I think in the Q&A in the last session, they mentioned that TLS 1.0 had been deprecated, and certainly we recommend TLS 1.2 or higher in our stack as well. So that's the split. The government has an active role, but they very wisely said, we're going to stick to the policy outcomes, and that's very tech agnostic. There's an old example when GDPR in Europe came out. They actually referenced Netscape Navigator. And so it's there codified in law. And some of you under 30 may have to go look up what Netscape Navigator is, but it's there and it's codified. So they've been very mindful not to name a very particular technology at any one point in time, because things do change. In the post-quantum world, we may be using, quantum entangled pairs instead of APIs in the future. Who knows? The idea is a developer interface is still an interface. Secure payload, a standardized payload is still standardized, and that sort of thing. So that's the relationship between the government and standards bodies like FDX. So let's see what we're doing next. All right, the rule itself was very limited. And we'll talk about that, to checking, saving, credit card. Now, some of you in the audience that have a regulatory background go, wait a minute, Don. They said Regulation E, Regulation Z, and wallets that provide it. Yeah, that's true. So technically, Regulation E for e-commerce is roughly recovers checking and savings accounts. Credit cards are covered under Reg Z and Trust and Lending Act, and they're there as well. So that's effectively the regulatory language. So please don't pillory me in the questions. That's effectively what they mean. But as we're customer-based and member-driven, We said, that's really great. But in order to displace screen scraping and credential-based access, what data is being shared today? And they said, well, all of this stuff is being shared. Everything you see on the screen is being shared today via credential-based screen scraping, not through APIs. So if we wanted to voluntarily get people to start using APIs and stop using credential-based screen scraping, we had to account for all that in our library. And so indeed, we have a much wider library than the law requires. Think about it like this. I still have my high school mixtape. There's no law banning cassette players. You just can't buy them anymore because no one needs them. Spotify is just so much better that people are using that. The old example I used to do, and I was showing my age, I have a bunch of VHSs from my kid was little. He loved Thomas the Tank Engine. Well, you can't find or repair a VHS player anymore. And so I was using DVDs and Blu-rays as my example, but that was still getting a bit stale as well. Talk about not codifying technology standards at any one point in time. So the idea is we built this massive library of cool things. One of the things I'm most proud of is being able to report fraud and pre-fraud elements, and also other elements as well. Anything that's being scraped today. The goal is to make it so useful, make APIs so useful and so highly available, so secure that no one in the right mind would knowingly want to screen scrape. And that's kind of what we've done with this. So let's go forward one more. So very quickly with my prepared remarks, what should you do? We've put a lot of free materials out there, but I would tell you this: if you work for an institution that's covered by these laws, figure out where you are size-wise, figure out what your deadlines are, talk to your compliance people, talk to the product owners, whether they're the digital channels owners, whether they are the product owners, and get them on board with this. This is coming. This is the law of the land. You're going to have to do that. If you're on a core processor, I encourage you, please talk to your core processor and work with them. Odds are you've outsourced some of all your tech stack with them. If you're a third party wanting to make use of this data and pull it across, I would encourage you to talk to your banking clients and see, well, when will your API be ready? This compliance deadline's coming up. How can I help? Can I beta? Can I pilot with you? And finally, you are not alone, okay? The FDX is here to help you, whether you're a member or not. One, you can have a copy of our spec for free. All you have to do is come and not be on the OFAC checklist. Yes, we don't want bad people to have a copy of a detailed bank technical spec. Two, you have to promise not to try to patent it. Our members are terrified of patent trolls. But that grants you or anybody on this call a license to use our API in perpetuity for free. You can even add to it. We don't care. We just want you to use it. Stop using IDs and passwords, for God's sake. Two, we have a lot of free materials here. The Getting Started Guide is probably the most useful. It's designed for you to go from zero to hero. But there's also useful elements that talk about user journey that we've done a lot of focus group testing with to help you take care of your customers in this journey. So there's a lot of things available. And finally, we'd love to have you as a member. If you want to have a seat at the table and interact with a community of 200 leading voices around the world on open banking and open finance and actually make changes to the spec, then certainly we'd love to have you as a member. I think it's very useful. And with that, those are the prepared remarks.